Billionaire Andrew Carnegie famously said that 90% of self-made millionaires build their wealth through investing in real estate. Are you thinking about taking the plunge and investing in the Albuquerque real estate market? Maybe you don't know where to start, or how do you know if you're buying a property that will be profitable? Well, you're in the right place. Today we're going to be talking about why Albuquerque is a place to be for savvy investors, and how you can tap into our market to supercharge your financial freedom. First, let's explore why investing in Albuquerque is a good choice. The demand for housing in Albuquerque is high, and the city offers a cost of living that's about 7% lower than the national average. Housing here is about 13% cheaper than the national average, and utilities are roughly 6% lower. The thriving job market with top employers like Sandia National Laboratories, Facebook, Intel, Amazon, Kirtland Air Force Base, and the University of New Mexico attract a ton of professionals to Albuquerque, ensuring a consistent rental demand. Now, if you're contemplating investing in real estate, the first step is to just educate yourself. In today's digital age, we have a wealth of educational resources literally at our fingertips. Listen to podcasts, read books, watch YouTube videos. Begin with a broad understanding of what it means to invest in real estate, and then from there you can start to narrow down your focus into what specifically are your investment goals. Before making any moves, you'll want to establish what your investment criteria is. You'll want to get real specific. Here's some other things that you can think about. One is property type. Determine if you're looking for a single family house, a townhome, a condo, or even a multifamily property like a duplex, a triplex, or a fourplex. Property condition. Determine if you're looking for something that's more of a fixer-upper, something that's more turnkey ready, or maybe you want to land somewhere in the middle. How much time and money do you have to invest in renovations? And obviously you want to establish what your price range is. Determine what type of financing you want to get. You can always go the traditional route, but there's also tons of creative financing opportunities out there. Location. Location is super important. You want to look for neighborhoods that have a strong rental demand and also the potential for property appreciation. And lastly, you want to look at profitability. How much money do you need to make to call it a good deal? In this video, we're going to focus on two fundamental metrics for determining profitability, or what makes it a good deal. And that's cash flow and cash on cash return. Now, there are many other metrics that you can use to determine profitability, but for this video, we're going to try to keep it as simple as possible. It doesn't have to be complicated. Cash flow is the first metric that we're going to talk about. Cash flow is just the amount of money that you're going to make each month in pure cash flow. Now, this is really important. It's not just the rent you make each month minus the mortgage payment. Pure cash flow takes into account what you're going to make each month after taking out all possible expenses. A positive number indicates that you're going to be generating income, while a negative number means that most likely you're going to be losing money. Again, you want to account for all possible expenses. So this includes repairs, general maintenance, vacancy rate, property management fees, utilities, property taxes, homeowners insurance, and capital expenditures, or CapEx. CapEx are significant but less than frequent improvements that are going to need to be made over time. For example, a new roof or new appliances. Those are things that you have to budget for. It's always better to be conservative in your income and expense estimates to give yourself a little wiggle room. So when determining what constitutes a good deal in terms of monthly cash flow, it's very subjective and can be based on what your individual circumstances are and what your investment goals are. For example, some might say that on a single family household, a couple $100s in cash flow each month is a good deal. For multifamily properties, let's say you're looking to buy a fourplex. Some might say, $100 to $200 per unit each month is a good deal. Again, it's very subjective and varies based on what you're looking to do. Some investors aim for a cash flow that covers all expenses and provides some additional income each month, while others are more content with just breaking even at the end of the month with the expectation that the property will appreciate over time and yield those future profits. The second metric, cash on cash return, measures your return as a percentage, and it looks at the amount of money that you've earned on a property annually in relation to the amount of your total investment. So your total investment can include things like, your down payment, closing costs, and any money that you've put into repairs, improvements, renovations, that sort of thing. So for instance, let's say you invested $20,000 into a property, and at the end of the year, you had $5,000 in cash flow. You would divide 5,000 by 20,000, and that would give you a 25% return. Now, 25% return is really, really good. If you saw that, I would buy that right now. So keep in mind, again, everybody is gonna have different guidelines as to what they consider a good cash on cash return. You can look at the stock market, and on average, typical returns can range from anywhere from 8 to 12%. So if you keep those basic guidelines, an 8% cash on cash return, you could consider a base run. 12% would be a home run, and 15% would be a grand slam. Over time, you can work to increase your cash on cash return, by raising rents or making other improvements. The question really becomes, can you get to those numbers over time? Investing has the potential to positively impact your financial future, not only by generating passive income, but building your long-term wealth. It's a numbers game, and it takes the emotion out of buying. But to find the best deal, you have to crunch the numbers. Every property has a specific price that would make it a good deal. You can even work backwards from your desired cash on cash return to determine what purchase price that is. Instead of trying to time the market, sometimes you just gotta take the plunge and make the purchase when the deal aligns with your investment criteria. Don't wait, just buy.